Hi, this is Charlie giving you Monday's commentary, and I hope you're very well. I am going to cover today's commentary off based on an email that I received. I've chopped it all down because there was some other questions that I had from this trader who was asking for various pieces of advice, and but I thought this was quite an interesting question actually. So you can see I've taken all the rest off. He said last one, he had a few questions. Hopefully you can see all this and I've not cut it all off, hopefully not. Said last one, I know of some traders that have just been consistently selling the euro dollar almost daily. Whenever it rallies a bit, they have been making hundreds and hundreds of pips each week. They have great results, and I feel frustrated because I'm being disciplined and not blindly selling it, but when I compare the results, I look at like a complete failure fighting for my 15 to 20 pips a day when they are easily or just easily racking up the pips for weeks now, selling into the dollar strength. Not sure if I really have a question here, just looking for some opinion and guidance really on moving forward. I'm tempted to just join the party, but I want to be in this for the long term and become a professional like yourself, and I'm unsure if to view these trades as either just good and successful or risk takers, or risk takers that won't likely be around in the years to come. And that was from a trader who emailed in last week with a few various different questions, and I thought it was a really good point actually, because what's the reality of trader returns? And I think that there's just a lot of people out there, just it makes me laugh that a lot of people out there think that it's easy to make, let's say, 50% a year. That's nothing, 100% a year, that's nothing, and I think there's just people just have completely misguided views on what is achievable or what is easy and what's not. And I think it's because out there a lot of traders will say that they're doing this X, Y, and Z, when in reality they may not be. So that like this individual was emailed in saying, look, I want to be in this for the long haul. Are these guys actually just really good, or are they just been lucky? And I suspect there's probably, I don't know the answer to that because I don't know who these people are, but I know from speaking to brokers over the years, from long-term relationships with other professional traders, that it's likely, if those results are true, because people do like to brag in the markets when it's not necessarily even true, all of it, but it could be, or that they're trading a 10p a point. It's all meaningless stuff. So easy to take trades when you're trading at £1 a point or 10p a point, less so when you're trading at proper money. But yes, I think that it could, if it is true, then it could just be that they're having a lucky spell. All traders have good spells. And then there'll be spells where they just get completely chopped up as well. No trader, I think this is the main message, no trader just makes money like that, making hundreds and hundreds of pips every week, and just does that all the time. Otherwise, if they did, there'd be a lot more billionaires, wouldn't there, from trading? It's just that's just the reality. So it's just not the case. And if they did, I would know about it because I would hear about it from the relationships with market makers and brokers that I have. That they'd be saying, "Oh yeah, we've got loads of clients who are all banging out hundreds and hundreds of pips every week." It doesn't happen. You have to trust us on this. So what is the reality? The reality is that traders have winning trades and losing trades. Winning trades and losing trades. And you've got two different types of traders. You've got your traders like our friend here, who's, like he said, he's grinding out his 15 to 20 pips a day. And he'll be on the march trying to do that. But then you've also got the traders who are more swing traders, who will be banking 100 to 200 pips, let's say, on a swing trade. But what you have to put it into perspective, because they'll have those trades where they make 100 to 200 pips, but they'll also have trades where they're losing 100 pips at a time, because their stops, being swing traders, will be wide as well. So there's a bit of smoke and mirrors going on there. And so the reality of trading is somewhere in between. Those swing traders who have, the ones who are good, the ones who do get those nice wins of maybe more than that as well, 400 or 500 pips, they will have nice spells of swings, and they'll also have their losing trades as well. So And then the reality is that for the people who are successful trading, they'll be meeting somewhere in the middle as far as their results are concerned. If it was just the case that there were traders out there just banging out hundreds and hundreds of pips every week, and it was that easy, then like I said, then we would be hearing about it, and we don't. We definitely hear stories of individual traders who occasionally hit a really rich scene. And that does happen, where a trader will just gets into. Usually, it's where they get into a single trade and they just run it and run it and run it, and maybe add to the position as well. And sometimes we do hear about we don't hear names and stuff, but brokers will say, oh yeah, we've got a couple of a few traders who just seem to be on the right side of the market at the moment, and they just keep on taking money off us. But then that runs through, and then they have their drawdown periods as well. So the reality of trading is that yes, you can make some very nice returns on it. And if you make 50% a year from trading, you should be very happy with that. If you make 100% a year from trading, you should be extremely happy with it, because that puts you in the top 0.01% of all traders. Now, obviously, making 100% a year on £1,000 in your trading account is very different to making 100% in a year on, let's say, £100,000 in a trading account. Always is different just as the numbers go up. But so I think that a lot of traders have to have a dose of reality and accept that actually, making these sort of returns, they're incredible returns, and of course you can make beyond that. That's what I've been attempting to prove over these 2 years with my trading challenge. And so unless I go and do something completely wrong in the next month or so, the challenge is going to be some point later on in April, the final update, then yes, I will be in that 0.01% of all traders. But for a lot of traders, actually making 50% a year, it's an incredible result. That's still an average of 4% or so a month. That is really, really good. So I think that when you're grinding it out and you hear stories about other traders, firstly, you have to put it in perspective. They may not be telling you entirely all the truth. Did they actually put money on that? Have you seen their accounts to show you evidence that they've achieved those results? But also, even if they have, they will have their losers as well. But traders are very good at not talking about their losers, that's all. And so anyway, that's all. So that's what I'd say is the reality of trading and trading returns, is that for a good trader out there, you can make these sort of returns annually. And some traders, outside of that, can obviously make even more annually. But if you want to be a good trader, get really good at making 50% a year, and then you can then build on that. You are still way up there if you're doing that. So back to our friend there. If he's banging out and trying to get 15 to 20 pips a day, that is absolutely brilliant, because it's all about consistency. That's a different style of trading to these traders who are doing swings. They will be having their losers as well, much like this individual will be having his losers as well. Don't worry about the amount of pips that you hear about, because I can trust me, a lot of it is nonsense. You hear traders, and traders will make hundreds of pips on trades. Of course they will. They just will forget to tell you about the hundreds of pips that they lost on some swing trades as well. Hopefully that's of use. These are the sort of returns that you'll be looking at, and you should be proud of the fact that you're getting yourself into the top 0.01% of all traders. Hopefully that helps. As far as the markets are concerned for this week, let's actually bring up the markets. I've pulled up the indices again, because if you remember last week, I highlighted the weekly charts and the weekly key reversals. We can see the Nasdaq's pulled off from that. The Russell hasn't too much. So the Russell, the Russell came down a little bit. It's come all the way back up. And if we have a look at the S&P and the Dow, they've come down a little bit off of that as well. So let's have a look. Yes. So they have reacted from that. The thing with key reversal weeks is you don't know how much follow through you're going to get from them. We have seen some follow through from them now. If we go back to the daily charts, then what we have done is we've put this really nice candle in. We sold off heavily again on Friday, but then we have closed off the lows. So it wouldn't surprise me to see this thing bounce a little bit more. So we'll see what's going to happen here. So if we do bounce, I think we've got the capacity to bounce back up into this zone. So if I can bring up I'll bring up a pen actually, rather than just putting a trend line on. Look at this old high here. We've got the capacity to bounce into this zone over here, and then the market's going to be starting to think about it, and what does it want to do? Does it want to then break up and go to new highs again, or is it going to attempt to then have another rollover? I don't know the answer to that, but those are going to be the levels to look at if it does bounce early next week. So we will find out. I'm recording this Sunday night, obviously, so that's what I'm talking about next week. It's FOMC on Wednesday, so that should get the markets moving around. So we may see a little bit of chop until then. So remember, FOMC Wednesday evening, that will probably help with future market direction. So for me personally, I'll carry on trading on Monday, Tuesday when I'm around. I'm not around much Monday, Tuesday, but I'll be then looking to really get positions after FOMC, depending on how we're going to be moving. And what I mean by that is if the markets come up into FOMC and then it starts selling off, then I would then short it. If it's then really gaining on after FOMC, then I'd have to be looking at buying it. Right, I shall leave that with you. Bit of a long one. I shall see you on Friday for live trading.